We start promptly at 9 Eastern every weekday. All right, we've got 30 seconds until trading begins this Tuesday morning. They're starting to clap. You'll hear the bell ring, the usual story. And we're going to open 30, 40, maybe 45 points lower. Remember, that follows quite a sell-off yesterday. 200 points to the downside. That took the Dow back to 17,700 at the close yesterday. That was yesterday. Today is about to open. The bell is a ring in. That means 7 seconds to go. And as I said, we should be on the downside to the tune of 40 points when all is said and done. And it's done. Here we go. 9:30 precisely. We're off. We're running. We're down 6 in the very early going. We're down 19. Okay, before we go. We're down 45. Okay, we're down, folks. Ashley Webster is here. So is Liz McDonald. Todd Horwitz and Hillary Kramer join the crew. Hillary, first to you. What happened to 18,000 on the Dow? We're a long way from it.
We could still get there, Stuart, by the end of December. We just needed to take a break, and everyone's digesting the fact that we will have tightening. And what does that really mean? What is the impact? It means that it's more expensive for companies to borrow. But if you look at some of the data, there's still a lot of capital expenditure planned.
You're not
buybacks.
Worried.
I'm not worried.
By the end of the year,
I am not worried at all.
The Fed raises rates.
No, and not at all. We still have that leadership in what we call those FANG stocks.
Todd Horwitz, come on in, please. 18K by the end of the year. You're not worried if the Fed raises rates?
Good morning, Stuart. I think the Fed will not raise rates. First of all, I think that's a bunch of rhetoric that's being passed around to kind of manipulate where you are. We'll probably hit 18,000. I would be surprised if we hit the highs. However, we're going much lower. The garbage that we're going to see back and forth here, there's no volume, there's no volatility right now. So the markets could creep higher. They may make a run at the high. Yesterday was really more of a profit-taking institution. It wasn't real fearful. There wasn't a lot of volatility. I look for much lower prices, but maybe not by the end of the year, but certainly going into the first quarter and next year, I think we'll be down 20 or 25% next year.
Whoa! Well, there's a headline. You say the last line is the best line. All right. Liz, before we go on with this, I want you to tell us, if the Fed raises rates in December, is that necessarily a bad thing for the stock market?
No. No, they've recovered before. I mean, we've been through rate hiking cycles, but we may be in a sales recession. You know, the majority of the S&P 500 companies have reported down 3%, nearly 3% in sales.
Okay. Now, we're down 34 points on the Dow Industrials. Not much movement coming out of the stock market this morning, so I'm going to stay on politics for a second. And Hillary Rodham Clinton. She blames Republican policies for slow economic growth. Ashley, the truth or otherwise of that?
Hey, she says that the original sin was caused by the Republicans who created the Great Recession, and now, no, she did, and then they still hang on, she says, to the fact that trickle-down economics works for the country. She said if they hang on to that, we are going to win the 2016 presidential campaign.
I've said this back in 2010. The Dems are about trickle-down government. By the way, government spending adds to GDP. So whenever the Democrats are in office, they do a lot of spending, and that makes GDP look better because government spending adds to GDP.
Yes. Hillary, you look flustered. Get into this.
Who committed the sins? Let's start with Barney Frank, for example. Okay, I mean, we can do a lot of blaming on the left here, and they really are very responsible for this. And if Hillary Clinton ends up in the White House, she's going to bring up the tax rate, our personal tax rate, to 50%. Anyone else on the right, all those Republican candidates, we're going to be down between 15% to 25%, and our economy is just going to start rocking and rolling.
Todd Horwitz, this is right up your street. Who's to blame? Hillary says it's the Republicans who are to blame for 7 years of slow growth. Go.
I think it's really who's in office now, but in the general rule of thumb, everybody's to blame because they're all full of it, and somebody's got to step up here and really make it correct because we've gone away from what our founding fathers intended is not what's being distributed today. We've got too many special interests, too many guys who can donate to both parties looking for the edge. That's what's got to stop. We've got to quit with all the billions of dollars we're wasting on an election and to go back to what real politics are about and really building the country instead of worrying about all this other crap that we put out all the time.
All right, you can tell.
All right, fair enough.
He means it. All right. Look